Have you ever said, I'd invest in real estate if I only had the money, and then went on your way? Building the capital to get started can take years, and building the know-how to get ahead, that can take even longer. But today on Escape the Clock, I have a guest who says it's possible to break into the market and build wealth without putting up any of your own money. I dig in to learn how reliable this approach can be for a financial freedom plan. Stay tuned to see if this could work for you. Welcome back to Escape the Clock, the show where we highlight strategies and approaches for achieving your personal financial freedom. I'm your host, Daniel C. Rogers. Only 37% of Americans believe they could qualify for a mortgage today, and nearly half say they'll never have enough saved for a down payment. With housing affordability at a 40-year low, real estate feels completely out of reach. But today's guest challenges that idea. Today, I'm speaking to David Webb, author of the No Money Millionaire. David pulled himself from very humble beginnings by making bold moves to break into real estate when he didn't have the capital to do it in the traditional way. Today, his portfolio generates millions in cash flow, and all of it began with creative strategies that required no upfront investment on his part. In his book, David lays out what he calls the No Money Method, a framework that shows how to acquire property through resourcefulness, partnership, and action. It's both a financial blueprint and a psychological reset, showing that the path to independence often starts with the confidence to make unconventional moves. David, welcome to the podcast.
Thank you, Daniel. Thanks for having me.
Awesome. Excited to talk to you. I read your book, and I want to kind of just start in the beginning, if you will. You share this journey, which really kind of started in crisis. It was like debt evictions and intense financial pressures. I mean, you really kick it off with this really interesting story about how even when the electricity gets turned off, you had to get very creative using your own car to keep the lights on. It's hard to imagine, honestly, someone going from that to a successful real estate investor who now teaches others how to do and build wealth. What was the moment that made you decide to take control instead of just giving up? And what was that first step for you?
I've been a persistent guy most of my life, like you said, the creativity with the electricity. I tried to get the electric on. The Edison just wouldn't work with me. They just absolutely would not work with me until I paid it in full. And so I had to come up with something. So, that's when I learned about the inverter and running the electricity. So I've been persistent, and I've always wanted to be in real estate. And, it really is about mindset. And that's what I learned. It took a long time to learn. I had done 2 no money deals throughout the course of my life. And I still thought after that second one, it never clicked in me that, hey, you just did those without money, without credit. It didn't click. I still had the preconceived, limiting beliefs that I had to have the down payment, I had to have the credit, had to have all my taxes in order. Even after I had done 2 no money deals, I still didn't know that I could do that. And I still was trying to pursue the standard thought that everybody has. Well, coming from where I'm from, I'm from the inner city of Detroit. I went to Detroit public schools. And so I didn't know anybody that owned property. I didn't know really anyone who owned a home, passive income was never spoken about in any circle or anybody that I knew. And so, about having your money work for you instead of you work for your money. Where I'm from, that's all you're taught is work hard for your money. That's it. And so even after doing 2 no money deals, I still didn't know I could. And, it took a long time. It took a lot of persistence, a lot of reading for it to finally click. And then that's where I've been now ever since.
I do think a lot of us think we have to go and line things up in a certain way and then kind of go through a traditional path to make things happen. And that's why I'm really interested to speak with you today, because I have talked to so many people at this point who was interested in real estate, but is not in real estate. There's like, oh, that's a thing you're supposed to do, but I can't do it. And it's usually because They're trying to figure out, oh, how do I get enough cash flow? How do I get the right amount of capital? How do I go through this? How do I learn that? And I get it, right? Like nearly 60% of Americans say they feel too broke to even invest or save at all. So, I think a lot of people though, when they would hear no money down, they might assume it's too good to be true. So,
Sure.
how do you help people understand that no, there is an approach here, like the difference between risky debt and resourceful leverage? Do you have some way of helping people get past that and say, look, there's actually something you can do to get into this without having to go and save up a ton of money first?
What you're saying is so true. I had someone that works for me, and it was a lady. I owned a convenience store in one of my mixed use properties that I own. I had a convenience store in there, and she was the manager of my store, and the book was coming out. And I told her the title is the No Money Millionaire, how to build wealth without using any of your own money. And she knows that I own property. She knows what I'm doing. She knows me personally, but she even said that doesn't make any sense. It just doesn't make any sense. And so that's a very common belief that people have, that it just doesn't make sense. It's not true. It really, it sounds better than it really would be without ever exploring it. And so I break it down, and I try to present it for anybody at whatever level they are. And so where I'm from in Detroit, really, really poor area, low income area. And I know a lot of people that are back there that are struggling. And I keep trying to tell them, hey, we can get this going for you. And that's what led me to write my book, is because I wanted to put it out there. And I wrote the book to a younger version of myself. I wished I had that 20 years ago or so, and then maybe I wouldn't have went through all the struggles I did. But I present it. Doesn't matter what position somebody's in. Somebody can have no credit, haven't filed their taxes, they can be upside down in debt. They can still start from where they are. Or if somebody has a little savings but still doesn't have, a lot of the other pieces, they can start where they are. So there's different levels of my approach, and I tailor it to whatever someone's situation is.
Got it. Yeah. When I was reading the book, I've done some of what you've done. I haven't done it to the extent you have. Like you're very seasoned at it, and I could see that. But I actually started looking for certain things that I knew were in the journey of going through and finding the deal and being able to close on it. And then, making sure you protect your assets and you do all those things. And I was able to find all that stuff. And I thought this was fantastic. It's very comprehensive. So I could definitely see that in your book, like how you were trying to take all these learnings and capture them all there. I think that's a very valuable resource. I am curious, when you started though, early days, I mean, it's not normal, I think, for most people to be brave enough to go forward at using someone else's money to close a deal. And so, how did you personally handle the fear of potentially losing that money?
I was fortunate that how my path went. The first no money deal I did, and you may have picked it up in the book, was one with my father. I was young. I was early 20s, and I came in. My father told me he was going to sell the home, and I said, "Well, I want the house." And he laughed at me. He said, "How are you going to buy it?" He knew I was in no position to buy the house, but I had determination, and I really, really wanted to buy the home. And so at that time, we had the yellow pages. I don't know how many people are going to remember those, but we had yellow pages back then. And so I just picked up the yellow pages and I just started calling lender after lender after lender. And I said, I want to buy my father's home. And they asked me the standards. How's your credit, down payment? And, immediately I'm being rejected, one after the next after the next. But I was relentless. I didn't stop. And so I kept going through it, and I found somebody that said, okay, let's try to figure it out. And he wanted to work with me. And so he told me, how to do this creatively, and how I used equity from, now this only worked because it was my father, but it introduced me to creative structures. So I was able to use equity from my father as my down payment. I brought my brother in as my partner for the credit. So that first one, I didn't really have somebody's money on the line. And then the second one was around the 2007, 2008 bubble. And everybody was getting homes. And someone came to me and they said, Dave, you could buy a home. And I was turning myself down before I even attempted to be turned down from somewhere else. I was like, I can't buy a house. I knew my credit wasn't right. My money wasn't right. And I was like, I can't buy a house. But I always would look through Craigslist just for anything. I would just look through Craigslist for all kinds of stuff. And I saw a owner finance, a seller finance, and I was able to get that second home for $1,500 out of pocket. And so, but it was even still after that, but 10 years later, the whole next 10 years after that, I still thought I need the down payment. I need everything to get a home. I had forgotten completely what I had done, and I still was on the standard path. And so it was when I found a multifamily that I wanted. I wanted it badly, and I just didn't have the capital to do it. And so this is when I reached out for private money. And I didn't know about hard money. I didn't know about DSCR loans. I didn't know all of this yet. I just knew I needed to get money to be able to do this and a partner. And so I reached out to three people that I knew, and I didn't know them very well. One person was the owner of the house I was renting. I didn't really know much more than that. And so I sent a text out. I did my homework though. I was thorough. I did my homework. I looked at the market. I got the rent roll. I looked at everything for that property. And I sent a text out to three people and said, I'm looking at this. Would you be interested in talking further with me? And I just sat there. I just sat there waiting, the anticipation. I was like, oh, what's going to happen? And the texts came through. 1, 2, 3. They all said, yeah, I'd talk to you. And so two of them, it didn't go through, but one did. We met, I broke it down, and it was because I was so thorough in my presentation that they were able to grasp it. And it wasn't that huge for them to move forward with. And so that was it. And then after I did that first one, I was like, okay, well, I'm going to do more of these. And then I've just been in it for 100% ever since. And so I think that was around 2017. So I'm going almost 10 years now, of knowing what I'm doing now. It was an expensive tuition to get there.
I really loved in your book when you described how to make a good presentation. Because as a professional project manager working for big companies, I saw so many bad presentations. And I remember trying to teach my project managers how to make good presentations. And it was a lot of the stuff you were saying in there, right? Like, don't make it more than 10 slides long, try to use bullets. It's quality over, quantity and stuff. So I could tell you understand that preparation's important. You have to have a kind of a sense or a gut for the deal. And then, some creativity is great, but you really do talk about it like you're managing a project. That really came across when I was reading your approaches. You find a lead, you organize everything, you even do the math to figure out, do you get enough returns that you might want. You then figure out, how am I going to finance the thing? How am I going to close it? And then if it's a rental, what's the right tenant for it and all that stuff. I want to ask you this though. Roughly 1 in 5 real estate investors do creative financing, like partnerships or seller financing. I found that in an Adam Data report from last year. So this is something that I know people do, but for someone who's listening right now who doesn't have any savings but is very interested, what is the first realistic action like you would tell them they should do to apply a no money method safely?
It really depends on their case. I have someone here with me that I had another building I was trying to purchase. I was leasing it while I was trying to work out a deal with the owner. And I had somebody, there was an apartment in the back. I was going to do another convenience store up front. There was an apartment in the back, and I was renting out the apartment in the back. Well, when I finally realized I just can't come to an agreement with the owner to buy the property, I decided to pull out of it. And so I told it was a couple that was living in the back. I told them that I'm sorry, but I'm not gonna own this. I'm not gonna rent this building anymore, and the owner isn't going to continue renting it. And they were in no position. These are somebody that I knew from Detroit that had came out here, and they're in no position to rent another place. They had 4 dogs. They didn't have good credit. They didn't have a down payment. So it kind of pulled the rug out from underneath them. And he said, "Well, do you have another property? Maybe I could rent from you." And I didn't. I didn't have anything that would work for him. And so, but I said, "Why don't you buy something? Why don't you, own something?" And he hit me with the standards. I don't have the credit. I don't have the money. And I said, "Well, I mean, you know me, you know what I'm teaching, you know what we're doing." I said, so I sent him on a path, and for his situation, he ended up finding, and this is, those things that when it's meant to be, it appears, it's there for you. And so he started searching, found a triplex, owner will carry. It needed some handyman work as a value add project. He was able to negotiate with the owner to do some of the repairs as his down payment. So he was able to get in with no money. 2 of the units were rented. One was vacant that he was going to move into. But the day he closed with no money out of pocket, he collected rent from the other two, which was paying his note. And he's happy as can be. So that's one that worked for his situation. Other people that I'm working with right now, I have them looking at fix and flips because they don't have money in the bank. They don't have a relationship with the bank. They need to fix their credit. They need to get taxes filed and get that caught up and be current. So with that, you can look at fix and flips where you can start trying to get some money, start putting it in the bank, build a relationship with the bank, pay off what you owe, and do that for the next 2 to 3 years. Just focus in that area until you get all your ducks in a row, and then you can move to DSCRs or other types of loans.
Yeah, no, that makes a lot of sense. Knowing that everyone has a problem they're trying to solve. Once you understand the potential situation, then you can kind of tailor how can I help be a solution here for people that kind of came across, knowing that, hey, someone might be in a situation where maybe they have to short sell. And, so you can bring less capital up front. Maybe you can find less you have to borrow and things like that. One thing I was thinking about a lot is a lot of people are in home ownership right now, but aren't real estate investors. They end up locking a lot of equity up in their home. And that's not working for you, right? That's stuck. And, you could probably take a home equity line out, like a HELOC or something like that. So I was thinking as I was reading the book, I'm like, well, there's probably people out there that would be way more interested in making that money work for them and might want to be a partner for someone who is trying to get into real estate investing. Maybe they don't want to do it themselves, but they're willing to help put up some of the cash. How do you find people like that? I imagine maybe people listening might be thinking about that kind of thing right now. Are there platforms you use or things, or is this just like kind of a viral thing that has to happen?
Right now, I'm working on a new video that I'm going to put out, and it's the 5 steps I would do if I started from zero to get me where I am today. And the first step is join real estate groups. Get out there, stuff Facebook, Bigger Pockets, anywhere that you can join Facebook groups, and introduce yourself. Be active in the group. Start commenting, posting. Do all of that. One of the further steps along is start going to business meetings, go mixers, go to the chamber of meetings, and you just have to get out there and increase your network. I heard this somewhere. I don't know who to give the credit to, but your network is your net worth. And I believe in that, totally. So you have to get out there and, introduce yourself to people, tell them who you are, what you're doing, what you're working on. And you'll eventually find people who are just interested and want to pick your brain about it and talk to you about it. And so, that's what I do. I'm very active. I'm on Facebook groups and different meetings that I go to. And so everyone that knows me knows exactly what I'm doing and how I'm doing it, how I take private money or, different loans. And so if someone wants to start and try to get a loan themselves and do it, or if somebody has some money, and the people that said yes to me out of those first 3, they told me, they said, we want to be in the real estate business. We just don't want to be in the real estate business. They're too busy. They're just too busy. They don't want to be managing properties and renovating properties. They don't want to do it, but they want to be part of this industry. And so there's a lot of people like that, like you mentioned.
Yeah, putting yourself out there makes sense. You have to obviously make sure it's someone you can trust, and maybe talking to the people around you might be a good first step. I want to ask you what's a creative deal structure that even surprised you that worked out? Do you have any examples of something kind of crazy that actually worked?
Well, that very first one was the most unique that I think. I mean, I was gifted equity from my father owning the home that was usable as a down payment. And then I brought my brother in for the credit. And since my father was really asking, this is, a long time ago, the house, normally he was only asking 80,000 for the house is what he wanted to sell it for. But when he saw my brother and I were coming up to buy it, he ended up only charging us 60. But we took the loan for the original 80. He gave us both $10,000. So I went in, I was broke as could be. I didn't have a job. I used the equity as my down payment, and my brother and I both walked away with the home and $10,000 in our pocket. So that was one of the deals. Now I just pulled one together. It was for 1.1 million. It's 9 homes. I did it all without a dollar out of my pocket, and I pulled in two other investors together, and we worked out a great return. Now these I've held everything that I've acquired so far, but these are the first ones that were actually turning. And so I saw what we were going to be able to do. One of the things that make my deals go through well is I base everything cash on cash. So what cash came out of your pocket and what cash is going in your pocket. And with me, I'm the project manager, like you mentioned. I'm not coming out of pocket with any money. So I'm not overly greedy. Everybody walks away happy, and that keeps the relationships going well. So you just have to structure it advantageously for all involved.
It wasn't lost on me as I was thinking through your role in that, kind of picturing myself in that role, that you are the project manager. That is the kind of the value you're bringing. You're putting everything together. And with project management, it's about aligning everyone towards a valuable outcome and ensuring everyone can move forward towards that. That's really what you're doing. You're sometimes you might be creating the path for people, but you're making sure it's moving. You're dealing with risks and you're making sure you can get there. I had read on Bigger Pockets that more than half of first time investors say that the fear of making a bad deal delayed their first purchase by years. This was like a regret people had. You seem to have a good gut for it, like sniffing out a deal, looking at figuring out returns. Someone who maybe doesn't feel as confident there. Do you feel like I know mindset's a big focus in the book? I felt I could tell you were almost maybe coaching yourself a little bit. Maybe that was what you meant by writing the book for yourself. But how do you see that? Is some people just not made out for this, or is this something anyone can kind of coach themselves into?
you know, um, the risk, the fear holds a lot of people back, and it'll actually keep people out of it completely. And you have to be able to embrace some risk. I was just talking with somebody that before they didn't want to take the first steps in. They didn't want the risk. They had a secure job. They felt very comfortable, and they lost their job. Their job was cut easily, and they learned how disposable they really were. And now they're working with me. They just acquired one of their first properties, but they think that job is secure, but there's risk there as well. I mean, what if happens? What if there's some cuts? What if they downsize? What if anything happens? And so it's always there. You just have to be able to um, be open to a risk that you're unfamiliar with. When when you have your standard job, we have a false sense of security with those. And so we feel it's very sound and secure until, something happens. So you have to, it's tough. It really is tough to be able to coach somebody to overcome that fear. They have to have a little of that in them. But also, I've helped bridge people. I've let people come in with me on some deals first so they can get their feet wet. They can just be passive, watch it work, see some of it in action where they actually had money involved. It's different when they don't have any money involved. But when they actually had some money involved, they saw their return, they were able to watch and go through it, then they get a little bit more open to, okay, I'm going to try this next one on my own. So some of it you just have to have training wheels.
How much of it is math versus instinct for you when you're looking at a deal?
I break numbers down. I really do. You have to have, it's funny. And I'm sure in your experience as well, everyone will tell you that you have to look for deals off market, creatively ways. And I teach the same thing. Look for it on Craigslist, look for it on Crexy, all these other ways. But almost all of my deals I've pulled off a Zillow, which that's like, everyone will tell you, don't go to Zillow for it. But my multifamilies, my package of 9 that I just closed on, they're all from Zillow. And they had sat there for when I bought a 20 unit. It had been almost on Zillow for a year, almost a year. And I'm sure it had a lot of people look at it, but I guess they didn't go through it as thoroughly as I. And another thing that's big with me that makes a deal a win-win is you have to buy it right. And I think a lot of people will see the asking price and they won't think that they can ask such a lower number. So they were asking $1 million for this 20 unit. Well, I went in and I ended up offering them 600. And so we closed at 675. And so maybe people just didn't think they could do that. I rejected myself. I told you during the housing bubble. I think a lot of people are rejecting themselves about offering a lower number before they even attempt it. So you have to buy right, and don't answer for the other person. Throw the number out, and if they'll accept it, they'll accept it. If they don't, they don't. It's a starting point, and that's how I've got most of my deals were from Zillow.
I just recently closed on a unit. I wanted to get something because my son's going to college in a different part of the state, and I wanted to have a unit near him that I could rent out for a while, and eventually I wanted him to stay in there. But anyways, they had been on the market almost a whole year.
Yeah,
And I did make a much lower offer. And even after they accepted it, no haggling, nothing, and we were going towards closing, I still had in the back of my head, this is too good to be true. There's something wrong with it. What is it? Like there's that fear
yeah,
just doesn't always go away. But
yeah.
before we run out of time here, I do really want to ask you a quick question first. How do you think about the market today? Do you feel like it's changed significantly now versus when you started? And have you adapted in your strategies for this current market?
I think the opportunities are there if you look enough. I don't I'm a firm believer in the power of thought and the laws of attraction and mindset. And I think if you look and you got your focus right, you're gonna find it. Now I'm lucky. I'm in the middle of the country right now. So where we are now, we don't get the big swings. Don't get the big swings up. They don't get the big crashes. And so here it's been pretty level. And I think I'm in Oklahoma, and I think I'm here at the right time. I think there's some growth going here, and I haven't seen any of the property values dip. And so, in my area, in my market, I I think it's been great. I've been able to find some really, really amazing deals, and the pricing's been really well. But I look, all over the country, other places that I've lived, I still look, and there's deals all over. You just, like I said, and you as well, there's deals sitting on Zillow that's been there for almost a year that people are overlooking. So, you just have to be open and look and just keep looking and see something. And that's one of the things I look for. I look on Zillow for things that's been sitting there, and it's been there that long. Let's talk. Let's see if we can get to the right number. So when I go to Zillow, that's one of the things I do. What's been on the market the longest? Let's see what we can do. So I think they're always there.
There was a bit of a framework, or I don't, a system, I would think I would call it, to what you were describing in your book. And I mean, you have lots of different possibilities and how you might get that first deal closed and the learnings you'll get from that. But then, you might be looking at your next one. I was kind of curious how quickly you should think about scaling up and how you kind of build on what you're doing. So maybe to ask them a bit more specifically, at one point you're talking about expanding each win into a network, and I think that's really smart, right? Everyone you work with is potentially another person you could work with again in the future. But I find it's really tough to get people to want to do a referral or to share the word and stuff like that. How are you able to encourage people to continue to work with you? Is it just that you closed the deal and you did what you said and people are happy? Or is there some other art to this that you're able to build up what you're doing?
I think there's a couple things there. I think one, when you do your presentation, it has to be thorough and clear. They have to be able to see it and break it down as clearly as possible and make it attractive. Everyone, it has to be a win-win. It has to be a win for everybody. A group that I'm working with right now, we hadn't even finished closing on the 9 that I've already talked about, and we meet quarterly. And I was just telling them we're supposed to close like in a couple weeks, and they were already asking me, what's next? What are we looking at next? And so one thing that I do for scalability and my gauge is I have to have everything stabilized. I don't want to leave a property. That property wasn't completed and it's not stabilized. So when I get a property and I present that we're going to increase the rents, we're going to do the value add, we're going to renovate it, we're going to do this, we're going to do that. I get it to where it's stabilized to what I had said that we were going to do. And then now let's look for the next. So maybe we could scale faster, but I like stability.
Are you looking for certain warning signs, or like how do you know you're not scaling too quickly?
I go for stability. I know. So, and that was one of the reasons that I looked at my second project was I got the 20 unit and we renovated it and I maxed it out. I got the rents up. When I got that one, it was on market for almost a year. They were bringing in $4,200 a month. I got it up to 17,000. And so I really brought the rents up. I stabilized it. It was good. I was turning people away. And so it's at that point, I'm like, okay, well, I'm not renovating anymore. I do my own renovations. I'm turning people away. It's time. It's time. I look for something else. I found something else in the same area, which I thought was great because I know the area, I know the market, I know what I'm renting for, and I can funnel people over to the next one. So it was just a natural progression for that one.
And when you're scaling, are you creating new LLCs or do you scale your LLC as well?
I put everything in its own LLC.
Yeah,
That property is in its own entity.
that's great. Probably my favorite part about your book was how honest you were about where things are going to go wrong. And as a project manager, it was really more about risk management. That was how we tried to be successful. Have your backup plan. Think about your mitigations, contingencies. When things go wrong, because as they're sure to do, how are you doing the best you can to protect the investors and yourself, your own portfolio?
I think one of the best things you can do, especially when you're working with other people's money, the best thing you can do is be upfront and be as clear as possible and say, hey, this is what's going on. And you have to analyze it well. Again, and I really agree with your assessment. I am a project manager. I look at the deal, I bring the people in, I present it all the way through, every bit of it. I handle the entire project. So you have to have the plan, what you feel is going to correct it, what your plan is. Be very open with your investors. They will work with you a lot better if you can hit it head on and explain, hey, this is what I'm incurring, this is what happened, and now this is what I plan to do to get us back on track. And your investors are going to appreciate that way more than if you try to fix things and it comes out later. I always think transparency is the best key with me. And so, you just have to look what happened and find the best resolution and address the partners accordingly.
Fantastic. Thank you so much, David. This has been really insightful. How can listeners connect with you and your book?
Thank you. Well, the book is called The No Money Millionaire: How to Build Wealth Using Other People's Money. It's on Amazon and Barnes and Noble, but right now we're offering it for a limited time for free. You can go to nomoneymillionaire.com. There's a link for a free download. So there's no cost. There's no reason somebody shouldn't get this book, start learning it. It's free. And so take it while it's available.
Fantastic. I'll make sure that's out in the show notes as well. And yeah, hopefully we'll be able to get a lot more folks learning how to do this. People can finally get real estate in their portfolio outside of an REIT. So thank you again, David. I really appreciate it.
Thank you. Thank you for having me. It's been great.
I learned a lot from my conversation with David Webb and from reading his book, No Money Millionaire. I'll admit, I was skeptical in the approach, and that is because we are told there are only one way to do things. Save for the down payment, have great credit, build equity, so on. That all takes time. And for many, some of those things aren't even possible. They're just complete non-starters. What David is teaching is that there are creative solutions out there. It's a message that completely redefines what's possible for the average person who wants to build wealth through real estate. What he spoke about today is that opportunity doesn't just belong to the people with capital. It belongs to the people with persistence, creativity, and conviction. Because other people's money, or OPM, isn't some mysterious Wall Street concept. It's just people helping people, each bringing something valuable to the table. For David, it started with family, his father and brother, but it doesn't have to be that for you. It could be a friend, a coworker, a former classmate, or even someone you meet at a real estate networking event. Every relationship can become a bridge to a deal if you approach it with transparency, integrity, and a solid plan. And that's the crucial part. Because when you're using other people's money, you're really borrowing their trust. That means you have to do the homework. You have to understand the market, the returns, and especially the risks. You have to know what you're talking about and back it up with a professional presentation that includes contingencies for when things don't go perfectly. Because let's be honest, things rarely go perfectly. But here's the beautiful part. Once you complete that first deal and you see that it actually works, something changes. You stop thinking of real estate as this giant wall of barriers and start seeing it as a series of doors. Doors that open wider each time you walk through one. Every deal teaches you something new. Every success builds your confidence. Every follow-through builds your reputation and your network. And that's how people scale. Not by luck, but by reputation and trust. David made another great point. Don't rush. It's tempting to get that first win and immediately chase the next one. But real growth happens when you pause, stabilize, and make sure your foundation is solid before taking the next step. Because the truth is, the only thing harder than finding success in real estate is keeping it. Partnerships can make that journey a lot smoother, especially when you're just getting started. Having someone to share the workload, the insight, and the accountability can turn an overwhelming project into an achievable one. That could mean partnering with someone who brings funding while you bring sweat equity, or maybe someone who has home equity through a HELOC, but doesn't want to manage properties while you do. The key is to build partnerships that complement strengths and fill in weaknesses. And if you're sitting there thinking, but I don't know anyone with money, here's the truth. You can find them. David talked about joining local real estate meetups, online forums, and even scrolling through Zillow looking for older listings or potential flips. That's where the opportunities live, not behind some closed door, but out in the open for anyone willing to put in the time and make the call. Just be careful. Make sure that anyone you approach is coming from a good place, you vet them, and it's a partnership of honesty and integrity. Look, the foundation of all of this, though, it is transparency. You have to be upfront about your intentions, honest about your risks, and clear about your follow-through. Because money can come and go, but trust, once lost, is hard to rebuild. So if you take one thing from today's episode, let it be this. You don't have to start rich to build wealth, but you do have to start responsibly. Do the homework, build the relationships, deliver on your promises, and over time, you'll realize that other people's money isn't about leverage, it's about partnership. It's about aligning trust, talent, and opportunity so everyone wins. The first deal might feel impossible, but once it's done, it changes everything because now you've proven it to yourself that this path is real and it's repeatable. And when you combine that persistence with integrity and purpose, that's when you stop just dreaming about financial freedom and start building it. If you want to learn more about David's work, check out No Money Millionaire. The book is currently free at his website. And as always, if this episode's inspired you, share it with someone who's been thinking about getting into real estate, but hasn't taken that first step yet. As always, I want to hear from you. What has been your experience with real estate? And how do you think about the idea of using someone else's money for investing? Thank you for listening, and best of luck building your cash flow portfolio and escaping the clock. I'll see you next time. Thanks for tuning in to this episode. Remember, while I'm not yet a financial planner, I am getting my degree in wealth management. You should take anything you've heard here as tips and advice to making your plan. To learn more, visit www.escapetheclock.com. There, you can find the book, resources, including the planner, and you can even schedule time with me. Please remember to like and subscribe so you don't miss an episode. Thanks for tuning in, and I'll catch you next time.